Good afternoon. This is Todd Colvin coming to you from the floor of the CME Group. We are talking metals and gold. A nice Friday rally getting us out of the doldrums that we've seen. Gold has been in a bear market, even going back to prior to the UK elections. It's just been a very tough trade to hold on to long gold. As we came down, we hit specific break points, and I think the line in the sand that we talked about was 1245. We got through that. We targeted 1225. We got through that, and then we got down to 1204. But if you look back to the March lows and to the lows we saw in this last move, they got close to 1200. We didn't break through it, and the market subsequently bounced. So right now we saw a big bounce off the lows, about a $20 rally to settlement on Friday, and it looks to me like we're out of the bear woods for now. We're certainly not bullish gold yet, but we're sort of in a more of a neutral wait and see mode. Likewise, with the news we had this week, we had Yellen speaking, giving a very dovish tone. We had weaker CPI, we had weaker retail sales. So there are some things that are going to be churning here that are going to push gold a little bit higher. But I think right now the sentiment is such that maybe the worst is over for the short term, and let's kind of wait and see where things go. Let's not forget, equities are still near all-time highs, and treasuries are still stubbornly low. So there is still some things that are looking similar as different as we look at Fed policy possibly changing in the near term. And now, what has the dollar done here? The dollar has just continued to take a nosedive. If you look at the DXY, which is the dollar index, which really measures a basket of currencies versus the dollar, it continues to make all year-to-date lows, and it just keeps getting hit. And this week was no different. As we just said, Yellen came out. She was not all about raising rates quickly, not all about being aggressive about paring the back balance sheet. She was not all optimistic about the economy, and the dollar really reflected that. And if you look at what happened back at the end of June, we had ECB, we had Bank of England, and we had Bank of Japan, along with Yellen, speaking at separate meetings, talking about the need to remove stimulus, the need to possibly let these economies go on their own as the strength had built up enough. And then, lo and behold, 3 weeks later, we're talking the other way. So it's more of a talk-back move. We've seen the dollar continue to get hit. That has helped the rally in gold on this move. Let's not forget that gold and the dollar have moved together and away from each other. It just depends on the day you pick. I think this week was one of those weeks where, yes, the declining dollar was definitely a reason for the bid in gold. And lastly, let's look at positioning. Specs really are the ones that drive the gold market sometimes, and I think that if you look at what's happened, the specs have been getting out as quickly as they can on this sell-off. However, I think when you get to 1200 and you see a $20 bounce, I think that could be a turning point. We won't know specifically because that data comes in arrears. However, it does seem to me that some of the buying that we're seeing late this week was likely new longs getting back in, whether they sold previously or just waiting for a better opportunity. It seems to me right now, if we keep prices on a settlement basis north of 1225, that's going to keep us in the neutral territory. We need a big move to get bullish again. However, you're going to probably see some buying going on, knowing that 1225 is a good support to buy against. So right now, gold looking better. We're not out of the woods yet. Let's give it some time. Next week, we've got earnings and an ECB meeting, which should take center stage. This has been Todd Colvin coming to you from the floor of the CME Group.